Hey, welcome back to the channel. Tesla recently posted a profit in their Q2 earnings report, far exceeding analysts' expectations. They are now eligible for S&P 500 inclusion after 4 sequential quarters of profit. They posted a profit of $2 per share with expectations of 3 cents EPS. They also posted a revenue stream of $6.04 billion on expectations of $5.4 billion. Tesla's earnings report highlighted many key details, including a $535 million increase in cash and cash equivalents to $8.6 billion. They also had $418 million of free cash flow. For profitability, they had $327 million GAAP operating income and a $104 million net income. So the $104 million profit is a significant figure in this entire report. They also have 4 quarters of sequential profitability, which means Tesla are now eligible for S&P 500 inclusion, as mentioned in the intro. Next US Gigafactory site is selected. We're going to be seeing a Gigafactory being built in Texas, and they will receive $14.7 million in tax rebates for doing so. We're also going to see an increased Model S range to 402 miles, and that has been approved. Model Y and China-made Model 3 production rates continue to increase, and Tesla have claimed that their business has showed strong resilience during these unprecedented times despite the closure of the main factory in Fremont for nearly half the quarter. As Tesla continue to invest in gigafactories and new locations, their bottom line will hurt, but this is the way they should be scaling as they continue to scale production and begin production for the CyberTruck, the Roadster and the semi-truck. Many analysts thought this was a poor performance because they had to scrape out a net profit, but I believe this is exactly what Tesla should be doing to execute in the automobile market. The $8.6 billion of cash gives them a lot in their arsenal to continue to build locations. They're going to build a Gigafactory in Texas, and they're planning one in Tulsa, Oklahoma. The Berlin Gigafactory is on its way, and that will produce Model Y, Model 3, and also continue to scale their battery production. Tesla's vehicle production and delivery numbers came in very strong at 82,272 vehicles produced and 90,650 vehicles delivered. That's only 5% subject to lease accounting. As you can see in the red column, automotive revenue was $5.17 billion, with $428 million of which coming in the form of regulatory credits. This was the main criticism of the whole earnings report by analysts, that the 428 million regulatory credits were what boosted Tesla to a profit, and without which they wouldn't have been profitable. Their automotive gross margin was 25.4%, which has been climbing sequentially quarter over quarter. This is because of Wright's Law. As Tesla continue to scale production, with their margins will also climb. The total revenue for the entire quarter, including services, was $6.04 billion, and estimates by analysts suggested that it would be $5.4 billion. The net income of $104 million is the most important, as now they're eligible to join the prestigious S&P 500 index. Tesla stock soared 8% after this earnings report, but gave up all those gains in Thursday's session. It also fell another 6.35% on Friday's trading hours. I do expect Tesla to trade around the $1,500 range for the foreseeable future. It currently trades at $1,410. Many analysts believe it's outrun expectations and has gone beyond a fair valuation. I do expect Battery Day to boost and propel the stock past $2,000 once the specs are released and people realise it really is game over. Tesla provided an update on Gigafactories. They're in progress with the Giga Berlin and have announced the Texas Gigafactory to produce the Cybertruck, which is imperative to future operations. Tesla are adding additional machinery to the Fremont factory, which is expected to increase total Model 3 and Model Y capacity from 400,000 vehicles a year to 500,000 units annually. Model 3 received a strong reception in China, not only becoming the best-selling EV, but also competing with mid-sized premium sedans such as the BMW 3 Series and the Mercedes C-Class. Tesla's deliveries in the first half of the year also grew quarter over quarter when every other auto manufacturer declined year over year. Tesla's Model S has a range of over 400 miles compared with the Porsche Taycan's 200-mile range. The Porsche Taycan comes in at $150,000 for the base model compared to $100,000 for Model S's base model. Tesla are far ahead of competition. Everyone thought Porsche, Volkswagen and BMW would destroy Tesla's opportunity in the electric vehicle market, but they just continue to grow and outperform the competition. You can also see in the bottom right corner that no other vehicles are close to Tesla's in terms of range, and Tesla are the only company doing over-the-air updates on their vehicles, further enhancing their software lead as Tesla continue to grow in a very lucrative market. Elon Musk has also highlighted that he doesn't want Tesla to be, quote, super profitable, which is exactly what they should do. They do not want to see massive profits. They want to see 1 or 2% of their gross profit going down to the bottom line. That's because they need to maximize their reinvestments in the business, because the automobile industry is by far the toughest industry on the planet. I hope you guys did enjoy today's video. If you did, make sure to hit that like button. If you're new to the channel, please subscribe and turn on notifications, as is by far the best way to support us. And I'll see you guys very soon for another video on the channel.